Welcome back. Now, as India recovers from COVID and restrictions across the country have been eased out, there is a humongous pickup being witnessed in domestic travel. And that is quite evident in the surge that you see across different holiday destinations at airports and, of course, the ticketing with respect to hotels as well. Let's straight away get to our guests to understand this further now, whether the hotel industry has pretty much weathered the worst of the pandemic. We have with us Kavinder Singh, MD and CEO of Mahindra Holidays, as well as Patanjali Keswani, Chairman and Managing Director at Lemon Tree Hotels. Gentlemen, thanks so much for joining in. Always great to talk travel on a Monday. I can tell you that I traveled over the long weekend, so I'm definitely contributing. Mr. Singh, let me get opening thoughts from you. Is this just a burst of, a little bit of revenge travel? Or do you think that this is a more sustainable trend because people have pretty much learned to live with this pandemic?
Yeah, I think if I look at what we see at our resorts, our resorts are running full. And I don't see this as just revenge travel. Because if you really look at it, the leisure part of the travel anyway started to recover even in Jan, Feb, March. So it wasn't just that people were wanting to come out. Of course, that's a core, let's say, desire. But the culture to get out of homes, to be with the family, to be in open spaces is something that is an after effect of pandemic that's going to last a long time. And more importantly, drivable destinations is where we are seeing a very, very good pickup.
So can you just quantify that for us in terms of numbers, sir? I mean, what kind of occupancies have you seen? And, have we gone back to the pre-pandemic levels? Just trying to understand what would the impact be on your own revenues by the end of the year? I know it's too soon to predict, but any kind of numbers that you can put on the table?
So if you look at the occupancies in July and August, we hit about 73%. And that's not the occupancy that you see in this period of time because, one of the other patterns that we are noticing is that the seasonality bit, which used to be big in the earlier times prior to pandemic times, is something that's, I think there would be really no seasons. Every season is a holidaying season. Because people are able to work from our resorts, children are able to write exams. So the idea that I would holiday only in a particular season on a particular period is, I think, now being turned on its head. So if I really look at numbers, quarter one, despite the fact that we had, a very severe second wave, we did about 51% occupancy on the operational resorts that we had. And as I mentioned, July, August, looking at 72, 73, probably we'll end the quarter around the same levels. And the business on books looks quite good if I look into the October, November period. So the whole, it helps in terms of our resort revenues. And there's an uptick we are seeing. As far as our member additions go, again, there we are seeing an uptick during this quarter.
Okay, that's pretty impressive on the occupancy front. Let me bring in Mr. Keswani into the conversation as well. Mr. Keswani, morning. So, at the end of June, the data that I have here shows me that you were at around 30% occupancy. Has it improved as much for you as well? If you could share any sort of numbers or a rough range so far in the second quarter?
Well, I have shared that, so it's not non-public. We are obviously not a timeshare company. So, it's not a member base, it's our own guests. So there has been roughly a 75% improvement in occupancy, which means we are obviously north of 50%. And there has been also a close to 30% improvement in pricing. So in the hotel business, our pricing is dynamic. Only about 20% is fixed. So the other 80% has seen an improvement in price by about 40%. And that is fundamentally because demand has picked up. So because it's just clearly demand and supply. So there is this enormous improvement and it's a week-on-week improvement. So if I look at June and then I compare it to July and then to August and now to September, then literally, every day, every week, there is a 5-7% improvement in demand. And I don't see the third wave really now, other than, of course, Kerala and Maharashtra, really affecting the hotel industry. So I see fundamentally that Q2 will be more than H1 last year. and double of Q1. And Q3 will be 50% better than that, and Q4 will be close to normal. So that's broadly what we are seeing in our demand projections.
Okay, that sounds pretty impressive. Mr. Keswani, so then with this level of improvement coming through in the second quarter itself, is it enough? I'm assuming it is enough to wipe off the red that we saw at the net level, at the EBITDA level as well in the first quarter?
Yeah, net EBITDA, we will be, see, even last year, we were close to, I think, 75% 75 crores of net EBITDA. So clearly this year we will do better than that. And you see, in our business, there is a very significant amount of depreciation, which is really cash profit for us. So we break even at, I think, 1.5 to 1.7 crores a day. And pre-COVID, we had already, our run rate was 2.5 to 2.7 crores a day. So I'm seeing a very positive H2.
Okay, got that. Since you're giving us a lot of numbers, Mr. Keswani, just one follow-up question there. You know, I know it's very hard to predict demand, but one thing that is in your control is costs. Have you been able to bring down costs further, and any more cost levers that you have for the rest of the fiscal which could help improve your operational performance?
So see, costs for me are basically operating expenses and interest. Okay. So when you look at our net debt, which is about 1550 crores, our interest rates used to be 9.3% about a year ago. Today they are 8.1%. So we saved a significant over 100 bips in interest rates. Then as far as operating expenses go, I've said this in various analyst calls that on a permanent basis, our operating expenses will reduce, based on pre-COVID to presently by about 80 to 90 crores. So total savings above, at operating level is 80 to 90, at interest level will be roughly another 20. So we see an improvement at the PBT level of perhaps about 110 crores a year. And this is already playing out in our case.
Okay, 110 crores a year on the PBT level, kind of impact you would see. Mr. Singh, same question to you, although your business model is very different, but I'm sure you are adapting to the new normal and bringing down costs. How much have you brought it down already, and what could the impact be on your own operational performance?
Yeah, so as you rightly said, our business model is quite different. And as we look at the various revenue streams that we have, whether it is the vacation ownership income, whether it is the resort revenues, whether it is the annual fee, all of them actually, if you look at over the last 5 quarters, have seen growth, actually quarter on quarter. Even Q1 over Q1, there was an improvement significantly. If I were to look at the cost part of it, there is a significant improvement in the resort operating costs, which is permanent in nature, as well as in the cost of acquisition. For us, cost of acquisition for the members also is an important cost. And we have been able to bring down the fixed costs on a very sustained basis. You can see that from our margins. As you can see, our margins even in Q1 improved over the Q1 last year. And even if you look at our trajectory over the last 5 years, we've been improving our margins by 100 basis points year on year.
Okay. Mr. Singh, same question to you really. I'm assuming with this level of improvement, even you will be back in the black. I don't know if it's going to happen in the second quarter, or if you could give us some projections. And also you have a fair amount of cash on the books. So what's the plan with respect to expansion for the rest of this year?
So if I were to look at coming back to the black, we are already in black. If you really look at our profits at the standalone level, even during the pandemic, we delivered a 37% growth in profit before tax for the full year. And even in Q1, we improved our profit by about 13%. So it's at the consolidated level is the number that you see, which is the last number. And that's also because of the fact that there are some Forex related movements, mark-to-market movements, which are more accounting movements. And there are some Ind AS 116 related entries. But if you look at the operating level, even at the last year, even in this quarter, we have been in black. If I were to look at investments and our outlook towards the future, we have already gone on record. We are putting in about 1,000 to 1,200 crores kind of investments. We really do not need to borrow. And we have about 950 crores of cash as of now on our books. So we have every intention to grow our business through acquisition of properties, as well as obviously taking new properties on lease as well. So last year we added about 9 resorts and we added 465 keys, and now we stand at 4,198 rooms for all over the country.
That's always good news for us, and I'm sure Sonia would agree. We love to travel, so the more destinations, the better it is for all of us. Thank you very much for joining in, and good luck with the coming months as well. Okay, so that's on the travel and hotels and hospitality side. Back to the market. Here, I mean, there's not much of an improvement, still